Yeah. I'm gonna ask the.
Perfect.
I know you always do, but.
Okay.
Somewhat.
It's supposed to be ridiculous when it starts and it is to do it.
Justin and Amber, what's up?
Hey Greg, how are you?
Good, buddy. How are you? Hi, Amber. How are you?
Hi, good.
Good, good. So we have Josh, Megan, Kayla, we have Alec, we have Jennifer and Teresa with cross country, Carla, more. So everybody here, I think, is familiar with white picket fence. I don't know if you started signing up, right? So Amber, we have Kayla here, one of our newer agents. She got registered with you guys as well. And then I don't know if you have met Jennifer and Teresa from cross country yet, but they're here as well. So we're gonna have just give it another minute or two. We're gonna have Jennifer here do some stuff on DSCR loans. What is going on with the camera?
I don't know if you guys, my family friend Neo, the young man.
Nothing like making an entrance.
Hold on one second.
I don't want to see my face.
I have no idea.
You want to dive right in.
Amber, you can still hear me, right? Okay, cool, cool.
There is one.
Yeah, there's one back here. If somebody wants to sit back here and then,
I know, right? What were you saying?
yeah, if you guys just want to bring in some of the chairs from those desks over there. Let me try the video again. Bada bing, bada boom. All right, there we go. Okay.
You going in?
Oh, good Lord. All right, video's going off. You guys can't see my face today. I have no idea. Apparently the camera doesn't like me today.
Is this oh wow,
Beautiful.
look, I did
Jennifer is
something.
screen
Oh,
sharing.
Jesus, I'm so loud.
Oh, you know what? Let me mute myself.
Oh, okay, I was so, oh. Why do I sound like that?
You gotta turn the volume on.
Mine? Like the computer volume
Or
or
Mike's
mine?
picking up your.
They're too close. Does anyone?
Hold on one sec. Technical difficulties.
What do you have to music?
What? Okay, how's that? Is that better?
Ready, ready, ready.
No.
Who else has one open?
Do you want to use mine?
I think
I can leave mine.
one has to be muted
Wanna do
and
that?
and not.
Are
Yeah.
yours, is yours muted right now?
Yeah, mine's.
Okay, cool. Yeah, let's do that. Good, Amber?
If you ever like listen to yourself and you're like.
Yeah, you're like, is that really me? Is that really me? So Didi, this is Neo. This is
Good morning.
Meatlick's friend, right? Neo.
Oh, Neo.
Neo.
Yeah, I'm saying Leo and Neil.
Combine them. Cool, okay. All right, so let's see here. This is not gonna work for me. So we are screen sharing Jennifer's
I did it.
and we are good. So we're gonna go over today. Thank you, first of all, for everybody coming, number one. We have some cool new faces in the office as well, some new agents, some potential new agents, some agents that are getting their license, right? So we're excited that everybody's here. I'm that annoying guy at the movies that has my phone on. That's me. But anyways, yeah, we thank everybody for coming. We have a pretty cool presentation today. Jennifer with Cross Country is going to be going over some really cool investment products, specifically, correct me if I'm wrong, but specifically the DSCR loans,
Yeah.
which kind of like give you a little bit of a background if Josh and Jennifer don't mind. But Josh reached out to Jennifer for an investor client that he had, was showing properties, and she had what, 5 or 6 properties already, Josh, something like that.
Yeah, she does.
Already had an investment portfolio. So you could say she was seasoned, and she was not even really aware that a investment product like this existed, which to me was kind of baffling because she's already an investor. She's not new to investing. She's, this isn't new to the game. She didn't even know this really existed. If she did not know the intricacies of it. So for us, we kind of were like, hey, this needs to be expanded upon for sure, because I know personally that I have agents such as Josh that work with investors every single day. And then we have brand new agents that have never worked with investors. We have seasoned agents that have never worked with investors. The whole shebang. So with that being said, to be able to work with these investors the way that you should be able to is having a good knowledge of these products that's available to them, number one. We'll always tell you guys that you don't have to be Jennifer and sit down and go through all the loan products. In fact, we don't want you doing that with them. That would be when you can call her up. If you're at a meeting with them, you can call her, she can explain, or Teresa can explain it. But we at least want you guys to have the basic knowledge of what is available for that investor, because they will ask. I know working with investors personally, they've always been a little more intricate in their questions. They've always had a little bit better questions, if you will, than your basic home buyer or your first time home buyer. So you guys want to be a little more educated on those products that are available to them, because that's going to, number one, set you apart from other agents. And then number two, just like in Josh's case, he's well versed in investors, but that gave him the ability to kind of showcase him and his team a little bit better, giving a product that she was not aware of. So we're gonna have Jennifer go over, some of these products today. We can get totally intricate if we want, or we're gonna keep it simple. But we definitely want you guys to have some questions either in the middle, the beginning, the end, because this is, this is big stuff. This is good stuff. So
Yes, if you guys can ask questions, because I was struggling with like how in-depth to get it, because I can give like a basic answer on how DSCR works, but then I would be done talking in like 2 minutes. So I brought up this is like one of our internal programs. So like Cross Country Mortgage has their own DSCR option. So I brought up like our kind of like basic, well, it's not really basic because it's 6 pages long, but our like internal guidelines on those. So I think maybe if anyone can like start with questions, so I can maybe try to get like what in depth to like start getting into, because surface level it's basic, but like behind the scenes there's like a lot more that goes into it. And I don't, like I was telling Greg, I'm like, I don't know like what totally. Okay, yes, please.
So my investor, for instance, didn't know what a DSCR loan
Right.
is.
Right,
At
so
its surface level,
at
what is it?
a surface level, it's an investment property loan that's no income verification. So basically, we pull credit, we'll show assets. You've got to have, depending on credit score, a certain amount to put down, and depending on loan amount, credit score, and how much you're putting down, you need a certain amount of reserves. And then outside of that, the only other thing that they verify is when we order the appraisal, we order a rent comparable schedule with the appraisal. And that rental amount needs to at least meet what their mortgage payment is every month. If the rental amount meets the mortgage payment, that's it. That's all they verify. So it's good for like most people that have like an investment portfolio. They either write off all their rental income on their Schedule E of their tax return. So they'll write off 1 million expenses. So for all their properties, they're probably showing losses for everything. Or if they're self-employed and they don't claim income on their tax return. So it's really good for people that can't qualify with like traditional income calculations. Like these are your people that you want to sell that to. And like I said, like people with an investment portfolio, no one wants to pay the IRS money. So everyone writes off every expense under the sun. And when you're calculating, like qualifying someone on their like rental properties, for example, we don't just get to say like, hey, they have a lease agreement for this much money a month. There's their rental income. We have to base it off of what they claimed on the Schedule E of their tax return. So they'll have like their full rental amount and then all their deductions, and that all gets taken out of their rental income. So most of the time people leave themselves with a loss. So on paper, it looks like they're not profiting any money, which again, I mean, pretty much everyone does that, because who the hell wants to pay Uncle Sam money? So these are people that would benefit from that, because like if you're not qualifying on paper, then here you go. It's basically like subprime lending that's like legal these days. So that's like the blanket of the DSCR loan, just rental income on the appraisal, and if at least meets the mortgage payment, then you're good. One thing that I do want to point out is I ran into this with a different realtor. He sent me someone and I'm like, hey, what do the comps say? Like, what is a fair rental amount? Like, shoot me your like conservative estimate. It's like all day, like $6,000 a month. And I'm like, annual rental amount, like not what they can make on an Airbnb. It's gotta be annual rental. So on any of these investment property, considering proposed rental income, rent comp schedules, it's not short-term based, it's annual based. So I'm like, he's like, yeah, $6,000 a month, no problem. So I'm like, perfect. Their mortgage payment's $4,500 a month. So solid. Even if it comes in short, we're good. The rent comp came back at $3,000 a month. And I'm like, sir, we are $3,000 off what you told me. Send me the comps where you got the $6,000 a month. Comes back, well, actually I couldn't find any, but like if she Airbnbs this, like no. Okay, so that's one big kicker, because a lot of people obviously Airbnb is that thing these days. Yeah. So it's annual rental amount, like that's what that's going to be based on. So I think that's like a big point that sometimes people
You mentioned
miss.
reserves. Like what type of reserves?
So reserves on the subject property. So let me see. I think there was a little section in all this giant mess.
Actually, this would be awesome, Jennifer.
You want
Like
me to
what we were,
send you
you and I were
this?
talking about.
Okay.
Yeah, because I can repost this, or
Okay,
email
there
it
we
to all
go.
the agents too.
So for our particular program, and we're not the only one that has DSCR, but I figured I would just go over ours. We can also broker these out too. Cross Country Mortgage just happens to have their own product, but up to $1 million loan amount, 6 months, 1 million to 2 million, 9 months, 2 million to 2.5, 12 months. Also too in lending, once you get over, I don't know if anyone deals with like real big loan amounts and purchase prices, but across the board, not just DSCR, once you get over 2.5 million, you start getting into a lot different guidelines and a lot fewer options once you go over that size loan amount. So the reserve requirements really aren't that bad. That's standard. I
Yeah,
mean,
that's pretty
anytime you buy
standard.
an investment property, you have to have 6 months reserves, even without the DSCR loan. So it's not that bad. And those can be it doesn't have to be liquid. It can be brokerage accounts, retirement accounts. The only thing that they still don't consider is crypto. If you have something in crypto and you need to use it, you gotta sell it and turn it back into US dollars.
What are some of the downsides from a borrower's perspective?
So the
Right.
rates, yeah. So the rates are higher on these. So it does come with a price. That was what I was trying to pull up. I wanted to show you guys like a difference, and I don't think I can share like my full computer screen. Do you know how to do that? Like when
So
I
at
did the
the-
screen share, I was
Let's
gonna
see.
just like show you guys my
I think it's a new
Is there a
share.
limit to how many?
no.
Wait, yeah, so can you, that 2.5 up to 2.5 million, that could be 5 properties.
Right, so that's just on one loan amount. So they won't lend over like one single transaction up to a $2.5 million loan amount. Should be like
So multifamily greater than 4 units.
up to 4 units.
So
Yeah, still in the like max 4 units. Once you go over, how do I, oh, I guess I
So
just have
is
to
it
pick
like,
a screen.
yeah, is it online or where?
I think it was. So maybe. Oh, share.
So if you click it and share, yeah.
Okay, so don't tell anyone I'm showing you this because this is my, these are our internal pricing screens. So just so you can guys be like inside lenders today. This is what it looks like when I pull pricing on a loan. So I did on this scenario, just 20% down, 741 credit on just a regular investment property purchase. So Fannie's pricing the best today. So this is what lenders see. You guys are getting the inside scoop. So this little third column right here, or actually, excuse me, right here. When that number gets to 100, that means a lender is at their margin. So interest rates are rates. The only reason when you talk to me and another lender that interest rates are different, it goes down to what the company makes off the loan and what I make off the loan. So if a lender, we don't get to change our commission, but you get to pick essentially, and you have like a set amount that you can make on a loan. So if a lender is profiting a lot and we have a higher percentage, our rates are shittier. So if you take a lower commission, then you can offer better rates, and depending on the company, how high they set their margins. So just inside, that's why rates are different. Rates are just rates. It just varies based on company and lender compensation. So this column, when it gets to 100, that means the branch is at its margins. They're not making any extra profit, but they're making what their set margins are on that deal. Once we go under it, that's how much it starts costing to do the loan. So I price down to 99 without charging anyone, because with this market and how crazy it's been, I cut my commission to win deals because I'd rather have more people in the door. So I can price down to 99. So you see though, we're still not up there. We're at 97.817. So the borrower would be paying 1.183 in points. So that would be the rate on an investment property today, with 1.183% in points. So I'm showing you this because, because the rate sheets don't even go higher. Like I can't even, like, if they were like, oh, I don't want to pay points, what's my rate? Mostly on investment properties, like you can't even price high enough. Like these rate sheets stop. So like the highest I can lock them is 7.5 with the points. Points are pretty standard. So if you're ever trying to like give someone, try not to give them like rough estimates on closing costs, because especially what the rates have been doing, it's pretty much coming with like some sort of points these days. But mostly on investment, like you can't hold pricing without points. A lot of people want to know like, what are points? So 1.183%, that's of the loan amount. So whatever the loan amount is, multiply it by 0.0183, and that's how much like it comes to in dollar amount. So as you see, some people will be like, well, how much does like paying 1 point get me? You'll see every spread that you go down in rate, like it's not an exact amount to like keep going down in rate. And as you start getting further down, I mean, the cost, like this is dollar amount, how much like this rate would cost, which you legally can't even pay that many points. Like it's not even possible. There's also a points and fees limit on a loan, but that's how much it starts costing. And as you see, like it just gets more expensive to get in a lower rate. But I just wanted to give you guys an idea, like a regular investment property rate, a little over a point at 20% down, it's about 7.5%. Now I'll go in here and I'm going to change this to a DSCR loan so you can see there's a decent hit to pricing. So it does come with a cost. Now, of course, it wants me to log back in because nothing can be easy. What I also tell people too, I mean, obviously none of us have like our magic 8 ball here on like what rates are going to do, but all signs point to at the end of the year, we should start seeing rates come back down. So I'm also telling people to not get, like, if people ask you, like, should I pay points? Like, how much should I buy it down? I'm telling people to not get too crazy with rate buy downs, because if rates come down next year and you refinance, whatever you paid on that rate buy down, you're not getting back. Like you basically just threw the money away. So I tell people, I'm like, obviously on that, you have no choice but to pay the 1.183%. Typically on any type of loan, like up to a point is okay, but I really wouldn't get like too crazy outside of that with the rate buy down. So, all right. Of course I missed something on all these screens. So for comparison, we were at 7.5 with 1.183% points.
So doctor position.
Yeah, so there are doctor loans out there that in any program. Yeah, actually just any program, like if you're a doctor or physician, sometimes they price better, sometimes they don't. It's not like an across the board like slam dunk thing, but there are specific loans for doctors and investors. So you're going to see the difference in pricing on this DSCR. So we're at 899. We're pricing at 97. I give a point. So that means at 8.99, they're still paying 2 points. So and you see all these hits here, you get hits to pricing for every 5% increments that you put down. So it starts making a really big difference going from 20 to 25% down, 25 to 30% down. Like it's a massive difference in pricing, especially if you're getting up there in loan size. On investment properties, I would recommend 25 to 30. I mean, obviously you can do it at 20, but you get hit on the pricing. So you'll see these are high eights. Not the best, but if it's your only option to get financing, then at least it's out there, and you can do it essentially no income doc.
Can you refi these?
Yeah, so you can. So that's what I've been telling everyone. I'm like, refinance, like even people buying their primary homes, first time home buyers, whatever. I'm like, most everyone that's buying right now, I mean, you're going to refinance. Like everywhere says rates are coming down. Everyone, that's the prediction. End of the year, we're going to start seeing rates come back down. Where they're going to land, no one thinks anywhere near what they were, maybe around like the 4.5% on a primary home, but still, if you're buying now, I mean, that's well worth it. So that's why I tell people too, like, you know, on this, like you've got to pay the points, the rate sheet like literally doesn't even go higher, but if you have the option, like don't get too crazy with buying stuff down. Trying to think what else.
When you refi in this program, are you refining into same program or are you refining?
I would, if you could refinance out of, I would, if I could refinance into, you know, just a regular investment loan, that, I mean, that was almost a 2% pricing difference going from the DSCR to the regular. Also, people think too, like Kelly, she already had a property that she like labeled as a second home. So second homes price a little better than investment properties. They actually used to price much better. They used to price very similar to a primary home. Now they're pretty close to investment properties, but second homes do price better. And she didn't know that she couldn't then call a new property her second home. She's like, oh, well, I already bought, you know, a second home before. And you can call that second home an investment property now and buy a new second home. Like there's no one to stop you from doing it. And same too, like just because you label something as a second home doesn't mean that you're not allowed to rent it out. A, no one's driving past your house seeing what you do after closing, but B, most people use the properties themselves anyway. It's like when they come to Florida or wherever, they stay in it when they're here and use it as a second home and then rent it out when they're not here. Second home has to be a certain, I would say it has to, there's a mileage guideline, but I've had some fall under that where it makes sense. So I had a person buy an investment property that was only 20 miles away, or second home that was only 20 miles away, which falls, I want to say, I don't know why I'm like getting myself confused. It's either 60 or 100 miles away that it's supposed to be. I think I'm thinking of FHA, that's 100 miles to get a second FHA loan. Anyways, it fell way under that, but his primary home was in like a gated neighborhood and the property he was buying was a condo on the beach. And it also, even though it was 20 miles, took him 45 minutes to get there. So we just wrote up an explanation for that. And even though it was technically under the mileage, he was still able to purchase it as a second home. So that's always an option too, just because like you at some point bought a property as a second home doesn't mean you can't now call it an investment property and purchase a new second home. So I suggested that to Kelly too. I was like, in pricing, it's a little better when you go second home. But yeah, if you refinance, the goal would be get out of the DSCR loan. Like I would, if you can get out of that, obviously those are higher rates. So I wouldn't plan on staying in that forever.
The short term.
I would. Yeah. I mean, if everything lines up. But it keeps going back to what people want to do with their tax returns. So like I said, I don't know who all's like familiar with what a Schedule E looks on the tax return, but when you do your investment properties on there, they have like their full rental amount that they make. And then at the bottom, it has their net, just like when you guys file a Schedule C for your realtor income. We take that net and then there's certain things like we can add back into it. Like if they write off depreciation on their property, like we can give that back to them. But most people, like you write off your taxes, insurance, like management, I mean, everything under the sun. So it just depends on where they land. Like if they would rather not claim that income and pay less money, then maybe just stay in the higher rate. Like it just depends on like how that looks for them. I was gonna show you, let me switch this screen back. Where okay, there we go. So this is like, this is the LTV requirements. CLTV, I don't know if you guys know what that means. So your loan to value is on your first mortgage. So an 80 loan to value means you're putting down 20%. So this grid means if you have over 700 credit score, up to a $1.5 million loan amount, the minimum down payment is 20%. CLTV is your second mortgages. So some people like to do a first and a second, where they take out their first mortgage at an 80 loan to value, and then they go get a second for 10%, where really they're financing 90% of the home, but they have it split over. You can't do that. This doesn't allow for like the first and second option, like the CLTV and the LTV are the same. 25% down at a 700 up to $2 million loan amount. And then same, it's crazy. This program goes down to a 620 credit score. I would be traumatized to see what that actually prices at. It's probably god awful, but it does. And then you can also refinance into these loans too. It's not just for purchase. So one thing that I told Kelly too, because she was like, maybe I'll just do cash. I don't know. If you have a client that buys something in cash, but wants like plans to go recoup their money and take a mortgage, like let's say they want to, for whatever reason, like the seller will only take a cash offer. I don't know. There is, if you buy it in cash and there's no recorded mortgage, there is a 6-month seasoning requirement, no matter what, to then go take a mortgage back out on that property. So I'm like, keep in mind that if you buy cash, like you're not getting a mortgage of any kind, not just DSCR, any kind without a 6-month wait period. So let people know that. I had someone call me at the closing table going, I just signed papers. I bought this property cash, but I need to get my money back. Like I owe this guy the $700,000 that I borrowed from him to buy this. I'm like, why did you not ask me before? Like there is no, that's black and white government guideline. Like there's a 6-month seasoning requirement. If there is a mortgage, if anyone's in that situation, like for them, had they just like filed like a private mortgage, like at closing or recorded that loan, then he would have been able to immediately cash out and pay that guy off if they would have asked ahead of time.
But if it's a pure cash
Yeah,
transaction.
6
no
months.
good. 6 months, yeah.
Yeah.
If it goes up to 2.5, is there a sliding scale on to the bottom? How low you can go on the purchase?
Like the least amount?
Yeah, the least.
We don't technically have, I don't know. I don't think we have a loan amount, like we don't have an exact minimum guideline. Some lenders do. We don't have an exact, I mean, I don't think I've ever really done one under like $50,000 because really like
It's like 350.
oh yeah, you're good at that. Yeah, we don't our company technically doesn't have any like loan amount minimums. We may, if we like see it and it's crazy low and we can't even like pay the processors on the deal, we may be like, we can't do that, but we technically don't have some of the brokers might on these, but I don't see that our product does.
Did you say $50,000?
Yeah, I think I've done a loan for like 35,000 because it was like this little old lady and I felt so bad and no one would do it. And like, I think we paid money to close that loan, but I felt so bad for her that I was like, okay, I'll help you. Fine. I feel like I talked a lot. Do you guys have any questions? Let me see if okay, there is one, which this is getting a little into guideline-y that don't think you have to know this, but I just want to point it out. Don't think you have to like memorize this stuff. Like this is obviously what I'm here for, but let's see where did okay, so there's a guideline, a thing in here that they want you to have, and it doesn't have to be in the most recent 3-year period, but it asks them to have a 12-month history of management, but they don't have to. So here, if they've never managed a property before, they've never had a rental before, they can still do the loan if they meet this. So 680 FICO, the 1% on the DSCR, no late housing payments in the last 12 months, so they can have no late mortgage payments in the last 12 months. Mortgage forbearances, if anyone, and I was just telling you this about your friend, but also too, if anyone asks you, this really isn't specific to DSCR, but putting your mortgage in forbearance causes a lot of issues if you want to go take out a new loan. Those guidelines have changed 10 million times and it depends on the loan amount. But if anyone's like, oh yeah, I'm going to go defer my loan, tell them, please do not do that, because you have significant delays depending on what type of loan you're going to do if you put your mortgage into forbearance or deferment. And then they want them to own a primary residence. The reason for that is some people back in the day, it was like a little trick. If someone couldn't qualify for a home purchase, but like somehow had the money to put down, they could just call it an investment property, because you get to use, not on DSCR, but like on a regular investment property purchase, you get to use 75% of the proposed rental amount to offset the debt of the house. So people would use that, like if they couldn't qualify for a primary home purchase and had the 15% to put down, they would structure it as an investment property, because they're using proposed rental income to help them qualify to be able to buy the house, even though they're like not really renting it out, like it was for a primary home purchase. So they like recently changed those guidelines where you either have to own a primary on the DSCR or on a like regular investment property purchase in order to use proposed rental income. If you don't own it, you have to document a present housing expense, because they want that calculated in the debt to income ratio. And that's like something that they came up with to make people not be able to use that proposed rental income to help them buy
So
a
if you,
primary home that they can't really qualify for.
if you don't own a house and say you rent, you can use one of those housing
On a
expenses still?
regular investment. On
Okay.
this one, if you've never been a landlord before, they want you to actually own your primary.
Your primary.
There's
That's a
some
good question,
let
yeah.
it. Most of the time on investment properties, you are not allowed to get gift funds. Now, are there, depending on how much cash that you need to get gifted, are there ways that we can get deposits in without being flagged? Yes. It was a weird broker that allowed gift funds. So I would have to find out if any of them do on DSCR. I want to say no, but I remember I did have a weird situation. It was the most random broker that allowed gift funds on an investment purchase. But for the most part, no, it's like the one loan program that doesn't allow gift money. So if yeah, so if it's cash, if your client has cash, like let me know. And depending on the loan program, there's different guidelines to how much, like which deposits get flagged and have to be sourced. Typically, it's over 50% of their monthly income. If we just see a random deposit of that, we have to document it.
I asked because an investor has $1 million in cash.
Who has $1 million in
And
cash?
we've not been able to do any for 9 years.
Yeah, because I'm sure his bank, that's the thing, we may be able to sneak it in, but doesn't mean your
The
bank
bank,
isn't gonna
yeah.
be
And
like,
we can't
where the
pull it
hell
out.
is all this
Yeah,
cash from?
exactly.
And we can't pull it out by property with cash. So trying to figure out a creative way.
I don't know, because like I said, like getting it into the bank is probably gonna be more of the
Well, even if
problem.
we did it in
Increments.
I did one property. Did another. The $1
Maybe-
million is not gonna
you know,
affect his.
A day in the life of a house mom at a strip
Yeah,
club.
because it's like,
Start off the day by cooking them some Vietnamese
You know,
curry chicken.
not the business model, the business
And then I
model.
head to the store to buy them some snacks.
So, I mean, we
After
could pay
that,
the
I
contract,
head to
but
the club,
Yeah.
that would require him to come down to Florida. money.
As you can
who the
see,
hell
there
has
is-
that?
You know, we could talk about that another time.
Yeah, I have
Yeah,
my-
my sister's doing, right? He just buying and the one that
And I
he's.
start curling their hair. He style
Yeah, it's an interesting concept, but he's never here, so that's a problem.
Like I had someone like that and like we situated it where it wasn't gonna get flagged on our side, but when they went into the bank, what's the, why can I think of it? The form that they want you to fill out in the bank if you're like depositing over $10,000
Yeah, I
cash.
just
They got, yeah, their bank was like, no, you need it. Like, we didn't care. Like they made a lot of money. So it was like under where we were going to, catch it. But the bank was like, yeah, you gotta like claim this and file this. So then that would probably be the harder part is. But seasoning, it depends. Typically on these, we look back 60 days in bank statements. There are like some, like regular investment property loans, I can go Freddie Mac, who only allows 1 month. So if they deposited and I can have a full 1 month bank statement not showing the deposit, I'll have no idea that the money got deposited in there. So there's always some sort of like, well, not, there's usually some sort of workaround, but if you have a situation, like ask me ahead of time. Do not let anyone ever just go deposit cash. Because there's like no takesy backsies. Like there's no undoing it. Like if they go and do something like that and like you're ready to roll and we have to like see that bank statement, then they'll back that money out and pretend like it doesn't exist. Like if I can't source it, they remove it from the available balance. So if you ever like have someone with like assets in a questionable area, like under their mattress, like just check with me first so we can figure out a way to get it in there, like unflagged.
So benefit for this loan product compared to like a regular conventional investment loan is number one, your credit scores are a little bit, if your credit scores are lower for the investor, this is a better product, right? Because
So
like a regular
you
conventional
can
side.
technically go down to a 620 on a regular investment. I would recommend no one even try, like the pricing.
Research
Let's
is
just look.
crazy.
I bet you I bet you that there's so many points that you can't even actually do it.
Do it.
So there's what's called a points and fees limit on a loan. So if someone's like, I want to pay 5 points and buy them out, like not that anyone would ever want to do that, but like you can't. Like it's a calculation depending on loan size and stuff. We have an internal like audit system that's run, but there is a limit on how much points and fees someone can pay on a finance transaction. So of course I would say at a 620, the pricing has to be the most horrendous thing I've ever seen. Technically, it exists, but I'd be willing to bet I can't even get a rate sheet to go high enough. So if you have someone too, I think we talked about this last, but if you have someone with credit issues, I'm typically pretty good with credit. The only thing I can't like get rid of is late payments. I mean, there's just nothing
hard,
but
yeah.
like collections, or like I can look and like have people get added on as users, or like tell them what kind of like secured card to open, or pay down your balance to this or whatever. I mean, we have someone right now, they came to us with a 560 credit score. I have them at a 724 now. So I can help too. So if someone's like has a 620 and they have enough money to put down on an investment property, we should be able to get their credit fixed up unless they've done something wild.
That like come from Canada or
Yes.
Africa or whatever, like British people that
So-
establish credit now, and they've been doing stuff like they bought a car, they have like a couple different credit cards, but how long?
It usually only takes like, so I literally have someone right now, they thought they were gonna be a foreign national loan. They're Canadians, but they actually have like, they work remote and they already live in the United States. So all I need them, and they have an L1 visa, which like allows them like eligibility to purchase a property here. So all I needed them to do is like claim their income on a US tax return, and they get now to do just a regular loan, but they had to establish credit too. And usually, I mean, once they have their social security number, like they can get a secured credit card, just like someone turning 18. A secured credit card is like they literally link it to like a bank account. They give you like a $300 or $500 credit limit, and your bank account is collateral to that. And usually in 30 days it hits. Like they went from no score to over 700 credit score once just that hit. Or if they have family members here, have them get added on as an authorized user. But obviously don't add someone as an authorized user to an account that's not in good standing.
Yeah.
Make sure it's like an older account, hasn't had late payments, isn't like maxed out, or else that'll hurt them. So getting added on as an authorized user account helps. A car will help maybe like get you a score, but auto loans really don't like do anything that great for your credit. It doesn't really improve it because there's no, I mean, like over 30% of what your credit score is your available credit. So on an auto loan, you don't get like credit for an available credit. Even if you owe less than what your loan is, like it really doesn't do anything. Like really the credit cards and the available credit on those
Yeah.
make the most difference. So like I had someone just getting added as an authorized user on like their parents' card that was like a 7 or 8-year-old card, like it bumped them like over 40 points, like
Wow.
just from something simple like that. So establishing credit is easy. The hard part is if someone made late payments and trying to recover from that. So I've had people try everything under the sun and I've never seen someone successfully get a late payment removed.
I did.
Did you?
I did with Wells Fargo.
Oh, for you, you guys did. Yeah, that's
oh,
right.
no, 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 no.
How hard did you have?
Like, they didn't switch,
So you
weren't
told your
getting-
servicing?
Yep. So we
Oh
didn't get emails or
God,
anything
what a
else. And then they just put in
nightmare.
their letter saying, would you like to go under forbearance? or whatever. I called somebody
No,
and said,
I would have had a heart
"We
attack.
had it." That's like $3,000 when we go, but it's been gone completely.
Think.
Yeah.
Some mortgage late. Woo.
Like he went to court. for it.
Yes, sir.
1031. There. How does that factor into this?
Good question, and I feel like it's a good question.
Fair enough.
Well,
I'm gonna have to ask.
1031.
Yeah.
I never
It's
like
eligible,
really,
but there's underwriting guidelines.
yeah, I don't know like what the details are on it. I would have to,
We're doing quite.
okay. Let me find out, 'cause I haven't run into it yet.
Yeah.
No.
So I'll find out. I'll
Thanks.
let you know.
Be around.
Is there any news with
Sweet.
the one? Like changes and stuff like that?
The only change that I've
see if I can
experienced, if
pull
you're
it
in
up.
an LLC, so for instance, properties owned in an LLC by more than one, it's not a single member, single member LLC. You try to transfer those funds to a new LLC, because we buy everything in a new LLC, so property 123 Main Street, and then 124 Main Street's a new LLC, so on and so forth. So if 123 is not a single member, we take those funds and put them into a 1031, try to put them into 1234, which is a single member, it won't fly.
Mm.
Can't do it.
So it's gonna go single member to single
It
member.
has to, because the problem was Pete's wife was on everything.
Mm.
She's no longer on everything. But his property holdings can't transfer to 123 Main Street because there's an issue with the membership on the LLC. So it's a big ordeal that we're dealing with the 1031. So basically what we have to do is we have to take 123 Main Street, transfer in the same name as 123 Main Street to the next property, even though it's not that
Not
property,
that property, yeah.
and then do a change on the name, and then
Through some biz.
do another,
Yeah.
yeah, we have to do an addendum to it, to the LLC, and then go through. A big cluster.
Not fine. Wonder if I can click on
I was wondering that too, because it's highlighted, yeah.
Yeah. so
That's what I was
we
trying to
could,
see
but we
if I
just
could
paid
pull it up
$800
anywhere.
LLC that we just have to- So all the properties are
The
now
freezing.
single member. LLC. And he's probably,
No, it's
which
like
is the
not-
umbrella,
let's see if I
is
can-
not a single member. So when we take it out of that, we have to actually put back the fees and then do it. Outside of that, it's not a big a deal. But, you know, I mean, good thing there's attorneys.
Yeah, right.
Yeah, nothing's like immediately coming up. So like dig into it a little bit.
Yeah, it's wild. Well, no, you know, the asset attorney didn't really think about it either when we were doing it, but. Because he doesn't use 1031 as a method of exchange. He uses-
Yeah.
It's like so annoying that I can't click on it.
he doesn't like 1031. That's what he likes.
When it's in here.
Oh, did she?
He just wouldn't use the best of
Let me see.
device out. You got a better idea. I do. We'll explain it to him.
I think above my pay grade.
Maybe.
Yeah, well above my pay.
No, I'm sorry.
How come hers is?
It only shows like
So
one.
it says we're viewing her screen.
It only shows the one. It doesn't like
Oh.
let me share my full.
Listen, I told- I told you, it's not as much as people say.
You told me that.
It's,
Yeah, that's so super. Okay.
Anybody on Zoom have any questions? Justin? Johnny?
No, I'm good. I'm just listening, taking in all the information. It's pretty straightforward.
Good, good.
Jennifer did an awesome job.
yes, thank you.
Thank you.
I always feel like I'm rambling.
And don't hesitate to call her, like that's what her and I were discussing before this meeting is, you know, it's good for you guys to know the product, of course, and know its availability, but you don't have to know
Yeah, trying to
this.
make sure.
Yeah, like call her, call Teresa, like they're there for that reason.
I think it's
So don't
just,
hesitate.
yeah, it's just good to like know that it exists. And like we talked about last time, like if someone has money to put down, there's pretty much a loan program out there these days that exists. So if someone's like, man, you know, I just had a foreclose, which this has happened, somehow they foreclosed and like have money in the bank, whatever, or like something crazy, but they've got money to put down. And by money, I mean like at least 20% to put down. There's something that probably exists for them. So just know, now, I just had someone come to me with like a 430 credit score.
Mm.
And no money and wanted down payment assistance. Those kind of people, there's not an ask for their seat yet, but yeah, if someone's got money to put down, there's pretty much a loan option out there that exists for them these days. So just like knowing that stuff like this is out there.
And probably rightfully so too, because they're not ready to purchase. So
Right.
that's one of those clients, you know, a lot of agents will call and say, hey, I have a client, I just can't.
I put them on a plan, but I'm like, I wouldn't
Yeah,
don't
you're,
be putting them in your car, showing them in your
Yeah.
houses right now.
and that's huge, like, but that allows you guys as agents to work with these clients and, you know,
Yeah, if you have something like that, like I went through her credit and, you know, gave her like stuff to do. There was some stuff that she needed to settle that she's gonna have to like save up the money over time to get to. So I mean, honestly, it's probably like a 2-year plan for her, but I still, you know, gave her stuff to work on in the meantime to like get her down that road.
yeah. Well, that's huge. Then it's up to them at that point to,
Right.
if they want to do it or
what
not.
they're
If
gonna
they
do.
don't, it shows you as the agent that they're willing to do it or they're not, you know? So like you said, you don't want to get them in your car and start showing them properties.
Like,
Yeah, I know everybody here's done it, but yeah, we've all done it. So anybody have any other questions? No?
I'm all out right
You did.
So a couple things next week. We have Wednesday, we're doing like team photos. And then also Sarah from Pelican Pics is also gonna do lifestyle headshots as well for all the agents that we're covering. So anybody that wants to do that, just let me know, but we're gonna be doing it, I think it's 10 or 10:30. Wednesday, it's gonna be around Jupiter. So some cool spots. We're gonna leave it up to her to kind of pick because she does that on a daily basis. And then Thursday, is it? I think Thursday, the 24th or whatever the date is, next Thursday, 23rd. 6:30 p.m. I remember all these times. 6:30 p.m. Sean, did Sean get with you, Jennifer?
No, it's a surprise.
About Thursday, the happy hour?
Oh, yes.
Okay, so Sean and Jennifer are doing a happy hour for us at Coal Fire here in Jupiter, Carmine's, at 6:30. So see, I told you that's what it was. It was, yeah. So
Do you guys have any other like topics you want me to do next? Like, do you guys run into people wanting down payment assistance a lot? Do you run into like condos a lot? Like anything else that you want?
Hometown Heroes,
Yeah,
do
That's-
you do that?
Yes.
Awesome.
that's the best one that exists. I love that one.
That's the one that it's for
teachers can do it. And so I'm really upset because I didn't move on this. My sister-in-law, who's a teacher at Dwyer, they had a mortgage company come and present.
Josh.
Here you
You
go.
guys have him on payroll?
I know.
There you go.
These are new.
No, this is their.
Yeah, there's also there's a new down payment assistance program that's being released February 21st. That maybe we can go over.
Cool.
I've
Yeah,
got like
absolutely.
the basics, but it's got a lot more occupations. It goes into like allowing more like office staff type people too.
Mm. No realtors yet.
The realtors don't get nothing. You buy your own stuff. So maybe we can do that next, go over the different programs.
Can I get this digital?
Yeah.
Yeah.
And that's another thing too. We'll
Yeah, I don't want a picture from your phone.
this one is the one I can send out to everybody, right?
Yeah.
Okay, so we're gonna take the DSCR guidelines that's up on the screen now and send it to,
Okay.
yeah, we'll send it to all the agents as well. Amber, did you have anything? Or you all good, Amber? Beautiful.
Amber, thanks.
So thank you, Amber, for everything. Your team is amazing. The best ever, amazing transaction coordinators. So we thank you guys and producers Title, Sean and Olivia. We thank you. We're looking forward to seeing everybody Wednesday. Let me know. I need to have a little bit of a head count. I think we have like 8 people as of right now. So just in the next couple of days, you know, by Monday, let me know if you guys are game or not, just so I can give her a heads up. And then Thursday, the day after, we'll see everybody at 6:30. And we're looking forward to seeing everybody. We haven't done a networking event in a while, so it's gonna be a good one. We'll have some fun. But other than that, we appreciate you, Jennifer, Teresa. Thanks everybody for coming. Any questions, comments, concerns, you know where to find us.
Right.